My name is Mitz Trades with the El Dorado Trade Group, and this is the fourth lesson of our series, Everything You Need to Know to Trade Stock Options, where tonight we will be discussing key levels and trend lines. Support and resistance, or key levels, are one of the most important concepts in technical analysis or charting, and play a crucial role in determining the direction of a stock's price. In a stock candlestick chart, support and resistance levels are price points where the trend is expected to pause, reverse, or break through on the horizontal axis on your chart. Key levels are drawn over your chart and are typically identified by connecting two or more low or high points. Every additional touch on a key level reinforces the importance of that level and makes the break of that price more dramatic when it eventually happens. Support levels are price points where a downtrend is expected to reverse or reach a floor, where many buy orders are stacked up. The idea behind support levels is that as a price of a stock approaches the support level, buyers become more interested in buying the stock, and this increased buying pressure is what causes the price to pause or reverse back up. Resistance levels are price points where the trend is expected to slow down or reach a ceiling. The idea behind resistance levels is that as the price of a stock approaches the resistance level, sellers become more interested in selling the stock, and this increased selling pressure is what causes the price to slow down or reach a ceiling. As the price of a stock moves, new levels of support and resistance, or key levels, will always be formed, and it's up to you to continually monitor the chart and add new levels accordingly. The next important concept I'm going to talk about is trend lines. A trend line is a straight line that connects two or more price points on the diagonal and is used to identify a current trend in the market. In the stock candlestick chart, trend lines are drawn over the chart to help identify the direction of the trend and the potential zones for reversals. To read a trend line, you first need to identify the direction of the trend. If the trend is upward, the trend line will be drawn below the price action and connect two or more low points. If the trend is downward, the trend line will be drawn above the price action and connect two or more high points. These lines can identify potential support and resistance areas on a chart on the diagonal. When the stock breaks these trend lines, sometimes it can set up for a move in the opposite direction. A break above a resistance trend line can sometimes indicate a potential buy signal, while a break below a support trend line can indicate a potential sell signal. Reading and plotting trend lines and key levels is a valuable tool for identifying the potential price movements and reactions of a stock at a particular area. By paying attention to these trends, traders can more accurately plan for a trade. Once again, this was Mitz Trades from the El Dorado Trade Group. Thanks for watching the fourth video in our series, Everything You Need to Know to Trade Stock Options, where today we discussed key levels and trend lines. If you learned anything in this video, please like, comment, or subscribe down below. I hope you have a great rest of your night.